thank you all for getting on this meeting. I truly appreciate you taking time out of your busy schedule to listen to what I have to say. We're having a series of 3 of these. We're going to do one each day, today, tomorrow, and Friday. And the purpose of this meeting is really to provide an explanation to you all. I sent out a memo last week advising our work comp members that we're going to take a mid-year rate reduction. That reduction goes into effect January 1st, or went into effect January 1st, and we've substantially lowered our work comp rates through the end of this year. And I wanted to give some more detail and background as to why we're taking those steps. I thought it was important to provide more than I could in a memo, an explanation as to what's going on and why the MMIA has taken this mid-year reduction, and then to open it up and answer any questions folks might have. So I'm going to go ahead and start with just kind of that background and that detail as to why we're doing what we're doing. About May or June of last year, sometime in that time frame, we became aware that the Montana State Fund was offering rates significantly lower than what the MMIA's rates were. It came about when we had a member who was quoted by the Montana State Fund, and that quote came in at a substantially lower rate than what we were offering. And then at about the same time, I heard from the Montana Association of Counties Work Comp Trust that they had decided not to provide coverage in 2021 and going forward. They were getting out of the work comp business. And they were going to migrate their counties to a Montana State Fund affinity group. Talking with MACO, they had concluded that they just couldn't compete with the type of pricing that the state fund was offering, and that they felt it was in their county's best interest to migrate them or move them into the state fund affinity group. A state fund affinity group is really, it's just a grouping of similar exposures, things like, counties or cities or auto dealers or bankers, people that do similar things and therefore have similar exposures. But they are in fact Montana State Fund policyholders. They're rated just like any other state fund policyholder. But conceptually, if the group performs well over time, they can be eligible for an additional state fund dividend if they perform well as a group. About that same time frame, the May-June time frame, I was approached by the agent that had worked with MACO with the idea of migrating the MMIA work comp members to an affinity group with the state fund. So it really put us in somewhat of a conundrum. We had an option of following suit with MACO and getting out of the work comp business, and in essence ending the MMIA work comp program, or maybe looking for a way to try to compete with what we were seeing as pretty significant rate reductions in the class codes that we provide coverage in. So we kind of took these options to the MMIA board of directors starting, I think, in August at an August meeting, and informed them as to what was going on. We presented kind of the concept of the MMIA migrating our members to the state fund or getting out of the work comp business as a possible option. We also talked about maybe taking a deep dive into how we rate the risk for work comp, what our financial position was in, what our reserves look like, and try to determine if there was a way to safely, and that's the key word, to safely cut prices in order to compete with what the state fund was charging for work comp coverage. We looked at this over a period of months. We worked with our program actuaries. We also worked with this agent to kind of elaborate or fill out what it might look like if the MMIA got out of the business, what it might look like for our cities and towns as state fund policyholders. And on January 22nd, the board met, taking all of this into consideration. They made the decision that they felt it was in the best interests of the MMIA and our collective membership to try to compete, to reduce our rates and try to compete with what the state fund was charging for work comp risk. I won't try to summarize all of the discussion at the board table, but I think the rationale, some of the rationale behind why this decision was made really rests with what the MMIA is. The MMIA was formed 34 years ago by cities and towns to allow cities and towns to kind of band together and self-insure in an effort to insulate themselves from market volatility, both in price and coverage, and to really control their own destiny, to not be reliant upon the commercial markets. The members that participate, all of you that participate in our programs, really have the ability to control pricing, to control coverage, and to control service, because you own us. And I think that's important. You're not reliant upon what's necessarily going on in the world, or what's going on in the country, or even what's going on in a corporate boardroom as to what services, what pricing you get. You guys get to make those decisions through your elected board of directors. You have a 15-person board of directors that are city officials. They do what you do. They know what you do. They are either elected or appointed from our membership. And they get to make the call on all of those things, on pricing, on coverage, and on service. And you're not reliant upon someone else to do that. We place a tremendous value on transparency. We're a public entity, we're an interlocal agency, so we have to follow all of Montana's public meeting laws, but we also put a great deal of value on stability and service, price, and coverages. Another factor that really, I think, weighed in was the work comp market in Montana. It's a very limited market. There are not a lot of people writing work comp insurance in Montana, and as a matter of fact, the Montana State Fund controls a vast majority of the work comp market in Montana. What this means is if the MMIA goes away, as did MACO, that just reduces options for cities and towns if the market turns, or if things don't work out, or if the service isn't there. There's just not a lot of other options for cities and towns if this state fund option doesn't work out. Also, the state fund price is different than we do. Their pricing is much more volatile than the MMIA's pricing. They have 5 different rate tiers. They can plug people in based on size, based on loss experience, et cetera, into one of those rate tiers, and they vary significantly from a tier 1 to a tier 5. And then how they modify rates based on experience is much more volatile. So that opens the door to a member maybe getting a rate reduction going in the first year, but having a bad loss and seeing loss year and having significant increases in year 2 or year 3 or year 2 and 3. And then finally, we looked at our program, and we determined that we were in a strong enough financial position that we did have the ability to without taking on undue risk, to take on some additional risk without putting financial burden on the program, to be able to cut rates and be more competitive. So that's kind of a background or the rationale in the approach we took in looking at this. And the decision was made to reduce our rates and to try to compete. And I'll say that the staff here, we are committed to providing those competitive rates and outstanding service. We're committed to keep this very successful enterprise that you all started going. But at the end of the day, we're going to need your help, because I know, I'm confident, I don't know, I'm confident that we will have agents knocking on the door of City Hall this spring wanting to quote your work comp business. And I'm also confident that if the Montana State Fund wants any one of you as a customer, they have the financial ability to cut rates. They are a big organization. They have a lot of assets, and they have the ability to cut rates and create a good deal. And really all I'm asking is that you give some consideration to what the long-term impact on that might be to your community and really to all communities in Montana. And then if you are being talked to or escorted by an agent, that you keep us in the loop. I can't guarantee that I'm going to be able to match any price the state fund will offer, or any other commercial carrier for that matter. But we will work to get close. We will work to be competitive. We will work to be transparent, fair, and consistent over time. And I think that consistency and your ability to control your own destination or destiny is critical. So that's kind of the long and short of why we're doing what we're doing. I think that looking at our finances, we have, we had the ability to take this mid-year rate reduction in response to what we're seeing going on in the marketplace. We will certainly, in rating for next year, take that into consideration as well. And we're going to try to be as competitive as we possibly can with the market. Quite honestly, we've been doing this for 34 years, and I've been with the MMIA for a lot of that time. And this is the first time I can remember where it's really been an issue as far as us being in a competitive situation with another carrier. But it is the reality that we're dealing with. So we're gonna do our best to compete and keep your faith in us. And so I wanted to throw that out, give you that background. I know I've got a couple of board members on. Doris, our board chair, Doris Pinkerton, and Jerry Jemison's on. I don't know if they have anything they want to add, and they certainly don't have to, but if they had any comments they wanted to add to that, and then I'll open it up to any questions or comments anybody else might have. We also have Tim Burton with the league on the board, and I know Tim was around when this whole thing was started, and he might have some comments as well. Doris, Jerry, anything you guys want to add?
You know, I really don't, Alan. I think you've just explained the situation very well. I just want to point out, if you, the MMIA is not per se an insurance company. And I think the basis to it is, is the cities and towns ownership. So I think that's key. And we've been able to provide the service to cities and towns because of that. And I just feel like the service has been there for years. I'm kind of with Alan. I started with the city a long time ago when there just wasn't a workers' comp option out there. So MMIA, has just been a strong basis for all cities and towns. So, the board did take a lot of all of this into consideration. Bottom line was, they want to be here for the cities and towns. So, I just think that's the basis of the program.
And if I could just add a little bit of perspective to that, that ownership, that controlling your own destiny, to me is critical. And we buy reinsurance in every one of our programs. I'm out in the commercial markets a lot, working with our broker, shopping price. And I will tell you, we're facing in our liability and property program 20-25% increases in cost this year through nothing that we did, just based on market conditions and volatility. And really the work comp reinsurance market has been pretty stable. And this has been going on for 2 or 3 years in the casualty markets. But the work comp market has remained pretty stable. But now the reinsurers in that market are seeing some opportunity. And I'm hearing we may see a 10% increase in our work comp reinsurance rate just because the market will allow it. And so being able to buffer yourself from that and control some of that, those reinsurance costs, certainly we have to bear, but there's such a small cost or small piece of the cost puzzle that we pass on to our members. It really does insulate you all from that. Jerry, anything you want to add? You're muted. Sorry.
No, Alan, I think you've explained it very well.
Great, thanks, Jerry. Tim?
Well, good morning, everybody. I just think it's important, and I know you spoke to it, both Doris and Alan, but the history of MMIA, not only work comp, but also property liability and health insurance. And dude, I remember it was probably 1984, and I was a grad school intern in Al Johnson's office. He was the city manager in Great Falls. Bob Worthington was the mayor of Great Falls, and Artie Aiken was a commissioner. And that's when we all started, and I was just an intern staff person helping Mayor Worthington driving to Helena to create the MMIA. And the whole point was, if we can't buy it on the market, then let's create an organization that can provide this coverage to our municipalities. And we changed the law that allowed us to do this, and created the MMIA. So from 1986 or so forward, this has been a municipal-owned organization governed by municipalities. And the whole premise on the creation of the MMIA, we knew that prices would go up over time, but with adequate reserves, good management, that we could control that growth rate with those tools tailored specifically to Montana municipalities. And when you look across all the services provided by MMIA, I think it was just a tremendous move by the cities at the time. I think it's been governed really well over the decades. And that ownership aspect, in my opinion, is a critical decision point rather than 1 year or 2 year price comparisons. And I believe that obviously the board's been responsive to the competition, but I would just ask you to keep the big picture in mind as potentially some competitors come knocking on your doors. I think that's about all I got to say, Alan.
Thanks, Tim. Just one final thought before I just open it up to any questions or comments. Looking at this 3 years ago, we were lower. The rates we were offering were lower than the Montana State Funds. So they've taken a substantial decrease in rates over the last 3 years. And I'm not going to badmouth the state fund. I think they're an incredibly well-run organization, but they're a big organization. They are. And my question is, how sustainable is this dip in rates over time? And at what point does it go back up on a global basis? And then individually, what happens when you have some losses? And we've modeled that, and I think there is a lot of potential volatility there just on how they rate their business. So with that, I guess I would stand for any questions you all might have. This is your program. This decision was made 2 weeks ago by your board of directors. Any comments, any questions that people have, I'd try to answer.
I don't have any questions, Alan.
Thanks, Jolene. How are you doing, by the way? Haven't seen you in a while.
No, it has been a while. Doing good.
Good. Anybody else
Alan,
have any comments, thoughts?
Alan, this is Brittany. Liz
Sure.
from Haver posted in the chat. It says, I don't know if everyone remembers this, but at one time, all Montana state employers and employees bailed out state fund with the old fund liability tax. Sure, the next couple years they could have lower rates, but what about the long run? So it's a post in the chat from Liz.
Yeah, I remember paying that extra $1 a paycheck on my for the old fund liability.
Yep.
Any other questions?
I have one question, Alan, I guess. As far as administrative and clerical category,
Yes.
it's a significant increase. So it's just,
Yes.
it doesn't from a dollar perspective, it doesn't add up to a lot, but it is a pretty significant increase of all those categories. Can you explain how that came about?
Sure I can. And I don't want to get too deep into the rating because that gets into actuarial stuff and I don't want to put people to sleep. But really what we did with our rates is when we fund our program, we're a small enough program. We don't take just the actuarial loss pick. They look at our history, they look at our exposures, and they say, this is what we think you need to collect in a given year. in this next year to cover what we predict the losses will be. We add a margin in that, a rainy day fund, because the actuarial loss pick is a 50-50 proposition. In 10 years, you'll collect enough money 5 of those years, and you won't the other 5. And so we've traditionally added a margin in there to make it more in favor of the house, if you will. And that's allowed us to be very consistent over time and stable on our rates, and has allowed us to build up a cushion. So when we have really bad years, we don't have to respond with significant rate increases or collections. So the first step we did in our rating is we reduced that rate margin. Or the risk margin. We took it out, and we are funding because we have that cushion in the bank. We're funding now at expected. Okay. We know that could result in years where we don't collect enough, but we have a cushion in the bank to fall back on. Then additionally, the second step we did, Jolene, and this is where your question comes into play, is we looked at the relativity between the class codes. And what that means is each class code kind of actuarially stands on its own. We look at what we pay for firefighters versus police versus public works versus office staff, and we charge accordingly. So they're relative in value based on the claims we pay. But
Okay.
again, we're a small group. So what we did is we took a look at NCCI, which is the National Commission on Compensation Insurers. They're a big national actuarial firm that prices work comp around the country. We looked at their relativity in those class codes, and we also looked at the state funds, and the actuary blended those three to more closely align us with what the competition is doing. And what that resulted in is a jump in that one class code. I think it's 8743.
Yep.
Where all the other ones went down significantly. So that's just the blending of the industry experience with our experience that caused that to go up.
Thank you.
You bet. And I will say, just as a heads up, kind of in response to that, we are looking at better defining our class codes, and this is going to be a project we'll undertake over time, and making sure that we're capturing the right exposure in the right class code, so that we are pricing those class codes right. Because technically, that office administrative class code really should be the lowest class code we have. But for whatever reason, we're seeing more losses there than the other administrative class code. So go figure.
Okay. Thank you.
Alan, I would just ask those who are participating for any feedback, positive or negative, that you have based upon our discussion here this morning.
Yes, thank you, Tim.
All I know, from a budget perspective, the police department was extremely pleased.
Yeah, went down quite a bit.
Public Works as well, pleasantly surprised.
Any other feedback or comments?
Alan, this is Dave McInerney from
Okay.
Great Falls. You had just asked if we were approached. I can tell you that the week prior to this announcement, I was approached by 2 folks. So they are they are being aggressive. Their recommendation to us was to maybe contact other cities of like size and go with that affinity group, take it to state fund and have that rated. So they're nipping at the heels and certainly reaching out.
Thank you for that feedback, Gabe. I kind of anticipated that would be the response. And I will tell you, we've got, our plan is to do our actuarial funding study this spring, as we always do. The difference would be, the relativity between the class codes and funding at expected, but looking at our losses, coming out with a preliminary rate, and then kind of taking a look at what the state fund is doing rating wise this next year, and seeing if we have to make adjustments even off of that. So again, the goal for us is to be as price competitive as we possibly can. Again, reminding that we are you, you are us, you own us, you control us. I think I'm biased, but I think we do it better than anybody else can, because all we do is municipal work. We're focused on you guys as opposed to every industry out there from a loss control and a servicing standpoint. But the flip side of price is we have to be prudent, and we have to be responsible, so that we're not just trying to compete at the sake of competing. We have to do it smartly. We have to, the long-term goal is to preserve this program and keep it viable and intact, because you guys, quite honestly, have done a great thing, as Tim talked about, in building these programs, and they worked very effectively over the years, and we want to see them work for the next 50 years. Any other comments or questions, feedback?
Nope.
All right, well, again, I guess I would leave you with, if, as Gay just communicated, if you are being approached, if you would please keep us in the loop, make us part of that conversation, and let us do everything we can do within reason to try to maintain this program and maintain your business. And with
Thanks.
that, I guess if there's no other comments or questions, we'll let you guys get back on with your day. Appreciate you taking the time, and it's good seeing some of your faces. I'm not looking at all of you, but I haven't seen a lot of you in a while.
Yep.
Thank you, Alan.
Thank
Good
you all.
day.
Thanks,
All right.
Alan. Thanks.
Bye.